Good morning, everybody. It's Monday, March 25th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Quickly here, overnight markets had May corn down a quarter at 439. May soybeans were up 3 3/4 at 11.96 1/4, and May Chicago wheat was up 6 at 560 3/4. We've got an exciting week here. It's going to be a shortened week with no trade on Friday due to the Good Friday Easter holiday. We will have the much anticipated USDA planning intentions report out at 11 o'clock Central on Friday. We will also have a bonus war room session after the report so that we can give you our thoughts and dissect what the USDA ends up coming out with. So with that, Ben, we'll kick it off to start the week here. Lots going on. We continue to bump up against technical levels, both in the overnight trade, but also, as a continuation of last week. So just a couple of thoughts there as we start the week, and we'll kick it around the room.
Yeah, looking at May corn first, 50-day moving average at 441.5. The 20-day is at 35. We know how really consistent on the way down the 20-day was for people that wanted to sell it. Interesting to note in the market profile, corn has continued to auction higher, even ever so slightly, with kind of higher volume and high tick number prints at 38, 36, 35 on successive days. We get much below that, we probably could open the door to trade down to 26. But it is interesting to note that we've spent now about 11 days above the 20-day, and that is really coinciding where this market, you could find some more aggressive selling should we dip below that area. So it's worth watching. I'm cautiously optimistic for corn still, but with one of the biggest reports of the year, we may just chop it out here for a little bit in front of that. I do think that there's a little more potential for wheat to lend some support. Potentially, we had unfortunately a really bad terrorist attack in Russia. I think it was on Friday, and they are bombing Ukraine pretty aggressively as we speak. This coming after lots of international calls for some sort of peace accord, looking at who's to blame for the terrorist attack. And at the same time, some people have gotten kind of aggressive in rejecting some wheat for quality concerns, some phytosanitary things that they're not meeting. So that coupled with big storms across the northern plains put a little bit of a bid under the wheat market. So I think that corn is really trying to figure out here if it wants to be at an inflection point of change for grabbing some more for a seasonal rally, or if this was just a post first notice day bounce and we continue to just grind out the carries. Seasonally, you would hope that couldn't happen, and we have a big data dump on Thursday with Friday being off. Soybeans, constructive. They did have a lower weekly close. They have traded on their 50-day moving average on about 7 of the last 8 days, slightly above this morning. It was interesting watching it trade on Friday. There was an ejection of shorts when we got below that the first time, and it was, it's very apparent when you watch it when you're hitting stop orders. It has stabilized and trading slightly higher this morning and back above the 50-day. It's when you look at these charts and you think in terms of managed money covering positions and sort of the automated nature of them staying with winners and losers and sometimes getting chopped up, is there is a lot of real estate above the 50 until we get the 100 to the 100-day in May beans at 1268, and in corn a pretty good runway as well, all the way to 466 in May. Pretty significant resistance at 55 to 60 in corn, and we're aware of the gaps that exist in beans on the continuation all the way up around 1290 and then 1240 to 1250 in the new crop. So I think that the managed short is kind of being put to the test here, probably a little bit more in soybeans than in corn, where they're wildly profitable on their short position. The soybean short I think it's probably teetering back and forth net on whether it's a winner or a loser at this point. There was a lot of shorts added sub $12 on the break. And certainly there were some shorts that were added sub 1260. So watching this market decide what it wants to do, I think we auction out, we get the data dump. I would expect a choppy trade between now and Thursday.
That's good stuff. Dustin, welcome back to the War Room this week here. We've got Bloomberg out this morning. I think it was 26 or 28 analysts were surveyed. Nothing groundbreaking here. They came back with 91.8 as the average estimate on corn, 86.7 for beans, 47.3 for wheat, and 11.3 for cotton. The Outlook Forum currently has the corn at 91 and 87.5. So they're, pretty closely in line, but obviously, nobody, you see some of the outliers in terms of the estimates, and nobody's willing to stick their neck that far out here on, a sharply reduced corn number. And we're hearing anecdotally from different folks that, maybe we did have some switching to beans going on. Thoughts on that?
Do you remember the S&P numbers in Forma?
Not right off the top of my head. We were pretty close, though. Like I said,
Okay,
all these estimates have been pretty closely in line.
Okay.
Like I said, nobody willing to really stick their neck out. It's,
Sure.
It's been between 91 and 92.5 for corn.
Yeah, and just as a reminder, that's a sharp reduction from last year's number. We were much higher corn acres than bean acres last year, so we should see some rotation back to a more even split. We thought when USDA Ag Forum came out, that was probably a much more fair look at what a split should be than what some of the surveys were suggesting. And then we heard anecdotally from different seed providers that they were selling a lot more corn initially than what we would have anticipated. So it got us a little nervous that maybe the market's not really planning on that big shift to corn or back to beans from corn due to the nature of the high ratio and coming out of a very heavy corn on corn rotation, like we would expect it to be. Anecdotally, at first we had heard the other way around. It wasn't until recently a different smaller seed company just came out, so they sold out of all their bean seed, and their corn sales were down 9% from the year before. Smaller company just said that last week. So it is anyone's guess going into it, but one thing else I think we've had a lot of people point out is that it was really conducive for field work in the fall, and that might have just set the stage for a lot more corn. We didn't have as low prices in the fall either, so perhaps there's another reason that we set the stage for a lot of fall application to just lead us to more corn acres. If we had to say today at this ratio, 2.5 to 1, closer to 2.5 to 1, and the insurance guarantees, we would definitely expect these numbers to be kind of low in these average estimates. Like, corn acreage 91.7 and beans at 86.6. I would think maybe closer to 88 and 91, or something in that range would be a knee-jerk response to it. But I'm actually kind of happy to see the estimates come out this way, a little bit, back in the favor that, acknowledging the seed company anecdotal data to start. Just because I think that if it does come out that corn numbers are higher, we have more safety nets through Farm Bill and through higher APHs in a lot of cases for growers on crop insurance. We actually think balance sheets are better at $3 corn than they are at $4 corn because of some of those safety nets. Whereas for beans, that might be a bit more of a concern, right? I would say everyone kind of agrees, for your central Midwest grower, the Farm Bill and the insurance might not be as strong for beans. If you're looking at $9 beans, what the safety nets look like versus, $3.50 corn. So kind of long-winded on that, but one thing I want to note though, going into Friday, is we tend to focus so much on the acreage and not on the stocks. And stocks numbers, those estimates have been all over the board. I'm looking at a range right now of about 450 million bushels for corn, for example, from 8.12 to 8.568. I think this might be one of the areas of bigger risk for corn, is a stocks number coming out a little higher than we anticipate. We are counting on a much faster usage rate from Beast 1 to March 1 this year than we were last year to get to this type of a stocks number. So that's one thing to kind of note, is maybe there'd be some more risk in old crop corn than there would be new crop, in my opinion. Just again, just opinion, not nothing to lean on too heavily. And then opposite for beans, where we've looked at really good crush numbers from NOPA for the last couple of months. Exports kind of soft, but we're talking about on December 1st, we actually had less beans on hand in 23 than we did 2022. Now we're talking about a pretty sizable increase of expected bean stocks from where we were March 1st, 23 to March 1st, 24. So I think one area to maybe do a little bit more legwork on, if you're trying to get near-term coverage, is, and we're thinking especially for growers that are trying to create certainty for themselves, maybe they're buying a put option to cover any sort of unsold corn. It might be that some old crop May put options might not be a bad idea, just if they haven't had it sold yet and they're waiting to sell. That might not be a bad approach going into the report.
Sure. And you could see, I mean, you referenced NOPA, and we've been setting record after record in terms of that report in our crush numbers. Could you see a path, Dustin, to getting carry out, down below 300 and starting to get to where that's, a pretty interesting type of balance sheet there?
Yeah, and the one thing to remember too with stocks reports is that we can easily see a couple 100 million bushel swings for corn in either direction, and 50, 60 million bushel swings in beans, and we chalk that up to variations in that survey. Maybe it's bushels in transit, or maybe it's just the total number of respondents. So I actually think stocks reports could be very volatile, and when you're talking about beans, it's not the percentage of carry out changes so much faster when you're talking about as tight as we have been for beans. So to see that number come in a little bit lower, yeah, it wouldn't take much for my imagination to slip back to below 300 million bushels for old crop beans. There's two sides of that coin, though. Why are we hitting record crush numbers? Maybe it's readily available stocks to crush, though, as well for beans. So I don't want to make any predictions. Our job is trying to cover risk for growers. And, I think that we've had a decent rally off of the lows here for both corn and beans, which is a gift for anyone that needs to cover risk going into the report in various ways. You can get option coverage cheap enough, in my opinion, above the contract low going into this report. That might be a consideration for you if you're still holding on to a bunch of grain that you wish you had sold.
That's good stuff. And, we'll continue to dissect this thing as we head into that report on Thursday. Thursday morning, it'll be at 11 Central there. I know we'll certainly have some time here in the next couple of days to really dig deeper and deeper into this and be prepared. Ryland, they got us on the placement number there on Friday. Missed on the estimate. What do you got for Livestock?
Yeah, I mean, definitely. I wouldn't say necessarily a shock. I mean, the market broke pretty hard towards the end of last week. It was a pretty big risk off, and I think the big concern is that, this placement number isn't going to be the end-all, be-all in terms of market direction, but certainly on the negative side. The highest estimate was around 108.8, and placements ended up coming in at 110. On feed March 1 came in at 101 and marketing's 103. So just in general, just kind of a negative report across the board if you're just looking at the estimates going in. So, I think you priced in a pretty big chunk of this, but like on the other hand, we're talking a difference of 60,000 head. It's actually like a record as far as February placements as well. So, I mean, like, it's going to be a negative report for sure kind of early on. We'll see what kind of damage they want to do to it. But I think the market was kind of prepared for this going in. We closed under some pretty significant moving averages. And I think there's going to be a lot more concern going out into the late summer and fall just with these bigger numbers that we're potentially going to see on the placement side of the market. So we'd expect some pretty hefty damage today. Maybe funds and managed money that are pretty long in this market. Maybe they play a little bit of defense down here. So hopefully it's a cattle on fade report this morning. But overall, I mean, there's no question about it. I mean, like cash was pretty good last week, 189.5 for live, 301 for dressed. I mean, like you're $2 higher in live and, almost $5 higher. And so, I mean, like, it's kind of hand to mouth. So it's hard to imagine that the front end of the market's really going to suffer that much. But the big concern is really going to be in the fall when we start seeing placement numbers start to get in the 2 million, kind of number. And we're seeing, the import market, really start to continue to stay pretty hot here. So I think that's a detriment, but overall, I don't think it's going to be a longer term mover and a shaker for right now. I think the market was pretty prepared for this going in. So
good stuff. Appreciate it. And I know you'll have a little more in your write-up here this afternoon, and we'll watch cash formations here on a short week as we go into the holiday. Appreciate it, Ryland.
Sure.
We just came into the open here. We got May corns up $0.0125, 440.5. Strong start here in the bean complex, up 10.5 in May beans at 1203 is the last. And May Chicago wheat's up 8, 563. Every day that the markets are open, we're streaming live on X, Facebook Live, and YouTube Live, 8:15 Central Standard Time. Appreciate everybody's thoughts and comments here this morning. It was a good visit, and we look forward to talking to everybody tomorrow. Have a great start to the week.
Thanks, Dan.